What if almost everything you've been taught about trading is wrong? Forget predicting every little market wiggle. Way back in the early 1900s, one man armed with just a ticker tape and a notepad figured out a system so powerful. It allowed him to pull what would be billions of dollars from the markets today. His name? Jesse Livermore. And he built his entire fortune on one elegant idea. Pivotal points. This wasn't just a strategy. It was a mindset. One that separated the true speculators from the gamblers. Livermore himself said, "Whenever I had the patience to wait for these moments, I always made money." Welcome to Guide to Wealth, where powerful ideas meet practical action. Come on, we've all been there. That FOMO, the fear of missing out, hits you like a truck. You jump in, convinced this is the one. And what happens? The second you buy it hits a wall and reverses. Another stop out. Another loss. So next time, you try the opposite. You wait. You wait longer. You wait for more confirmation. And by the time you finally feel safe to get in, the move is over. You missed the whole run. But this isn't bad luck. It's a cycle. A trap. One that drains trading accounts and convinces you the game is rigged. But Livermore proved it's not rigged. It's just a game with very specific rules. The man who cracked this code was Jesse Livermore. He wasn't a professor or an economist. He was a student of the market itself. He believed price movements weren't random. They were driven by one thing: human nature, fear, and greed. And because of that, patterns repeat, over and over. Livermore's genius? He realized the most important part of trading isn't predicting the future. It's reacting to what's happening right now. His solution? The pivotal point. This is the heart of his entire method. A pivotal point isn't just any support or resistance level. It's a specific price zone where a stock's trend is confirmed by a decisive move on high volume. It's the market's way of tipping its hand. It shows you this move isn't just possible. It's probable. Livermore didn't act on opinion. He acted on confirmation. And that's what separates winners from the 90% of traders who never make it. So how do we spot these pivotal points today? Livermore had a notepad. You've got charts. But the principle? Exactly the same. Let's break it down. Imagine a stock trending down. It bottoms at $40. Then it rallies to $49 before pulling back again. Now, where's your focus? Right back at $40. That level is your potential pivotal point. Now comes the hard part. You do nothing. Don't buy at $40 just because it held once. That's guessing. Livermore waited. He wanted proof. Here's what he looked for. The stock touches $40 again. Maybe dips slightly below. But it refuses to break down. That's signal number one. Sellers are losing strength. Then the stock starts to rise again. It moves up to $43, then $45. And here's the key. Volume explodes. That's signal number two. The institutions are stepping in. That combination, a successful test of $40, followed by a strong rally on big volume. That's your pivotal point. And that's your entry. This exact logic works in reverse for short trades when a stock fails to break a major high. Spotting a pivotal point gets you in. But to make money, you need Livermore's 3 golden rules. Rule 1. Risk management. Cut your losses fast. Livermore's personal rule? Never lose more than 10% on a trade. Before you buy, know exactly where you'll exit if you're wrong. And if the stock turns against you, don't argue. Don't hope. Just get out. And never ever average down. Rule 2. Pyramiding. Start small. Only add after the market proves you right. Livermore bought more as the stock went higher, never lower. That's pyramiding. It lets you build a large position with minimal risk. Rule 3. Let your winners run. He said, "It was never my thinking that made the big money for me. It was always my sitting. If the trend is strong, hold. Ignore the noise. Let it ride until the price action tells you the move is over." More than charts. More than numbers. Livermore knew. The real battle was in your mind. Hope keeps you in a loser, praying it'll come back. Fear makes you sell winners too early. His system, designed to remove emotion. You cut losses at 10% because that's the rule. You hold your winner because the trend says so. And perhaps Livermore's greatest strength? Patience. He said, "There's a time to trade, and a time to go fishing. If there's no setup, you don't trade." Simple. Most traders feel the need to always be in the market, and they end up funding your next big win. Even Livermore wasn't perfect. He made and lost multiple fortunes. And every time, it was when he broke his own rules. The Livermore method isn't a magic trick. It's a business plan. Let's recap. 1. Stop predicting. Wait for the market to confirm direction at a pivotal point. 2. Manage your risk. Know your stop before entry. Never average down. 3. Manage your winners. Pyramid into strength. Sit tight. 4. Master yourself. Discipline and patience are non-negotiable. Trading isn't about being right. It's about acting on what the market is doing, not what you hope it will do. Livermore gave us the blueprint. Stick to it and you're no longer gambling. You're finally trading with purpose. If this breakdown helped clarify the Livermore method for you, do me a favor. Hit that subscribe button and turn on notifications for more strategies, stories, and financial wisdom, and share with someone who needs this. Thanks for watching. This is Guide to Wealth, where powerful ideas meet practical action.